Hi everyone, hope you're all doing well, and today I'm going to talk about the 5 stocks that I'm currently watching. There's a few more than this, but these are definitely 5 that are on top of my watch list that I'm currently watching right now that are on a little bit of a dip. And well, I say that a lot of these stocks are down a huge amount, and because of them being down a huge amount, it kind of attracted me thinking, is this an opportunity to go buy it where I can make money? So yeah, we'll kind of go through 5 companies today that are on my watch, well, very high up on my watch list, and we'll just spend maybe like a minute or two talking about these couple of stocks. So yeah, if you could smash the like button. I was supposed to bring this out on Sunday, but then I saw the list of earnings and I was like, right, we just have to make a video about that because it's going to be a crazy week. Obviously starting with Tesla today, but yeah, I was going to make this on Sunday, but then I saw the earnings and hey, maybe a day late, but we got there. So we'll just spend like a minute or two talking about some of these stocks that I am currently watching. If you do want to join the Patreon, the link is in the description. If I do end up buying any of them or these stocks I'm showing you, they will be posted on there first. As well as on there, we do some private live streams, some education classes, portfolio reviews, a Discord. Yeah, it's pretty good really for £5 a month. And if you do want to start investing, some links to some brokers as well. But we'll get stuck onto these 5 stocks that I'm currently watching anyway. So first of all, we're going to start off with this one, which is SmileDirectClub. I actually had an investment in Align Technologies, which actually did very well for me. I think it was a company that I sold out of last year or the year before, which is a bit similar to these guys, but these are like the cheaper product that are kind of going against Align. And if we were to have, I'll just very quickly, Align stock, if I can just have a quick look at Align stock, you'll see this company has done fantastic, especially over the course of the last few months. This is actually probably one of the companies that I should have held on to a little bit longer. I think my average was somewhere around like the maybe $190 range. So yeah, if I held these actually a bit longer, I would have done even better. But very similar. They do clear aligners, and SmileDirectClub are very much the same. You know, they work on aligners to try and straighten your teeth, and for example, but the cheaper alternative really to Align. So I've had investments in this industry before, and it's done very well for me. And same again, I'm looking at this one and thinking, you know what, this could be another opportunity in the same sort of industry. Difference between this one though, I think Align do they do 3D scanners as well for your teeth. So you have it's very complicated, but basically it's like a big 3D printing on the screen of what your teeth look like. I've actually had it used once on me before, long story, and ended up having to have an emergency wisdom tooth taken out, and yeah, that's when mine actually got taken to see how bad my wisdom tooth was going against some other teeth. That was a few years ago now, but back on topic, SmileDirectClub, these guys just focus on the clear aligners. These guys actually came onto the stock market in 2019, September 2019, came on around about $18, and yeah, since then the stock has absolutely sunk. Obviously, a few months after you had the CV situation, which obviously never helped the company, but since the CV times, pretty much like everything, we have been on a little bit of a rise, but since probably September time, the stock's kind of had a bit of a chill out for the last kind of half a year, or the last kind of 6 months period really. So the stock's kind of flatlined again, and just generally since 2019, we're coming up to nearly 2 years since it's been on the stock market, and yeah, the stock's kind of not really done anything at all. The stock's currently, I might do a full video on this one actually. As I say more about it, I'm actually thinking, yeah, this is actually a really good investment. But yeah, I just like it because it IPO'd. You've kind of had the old IPO hype die down now, and we're left with a decent company. It's a company trading at about a 4 billion market cap, which isn't too bad when you look at the revenue side of it. It's not too bad of a hefty price sales ratio that they'll be trading at. I won't do this for all of them, but this one in particular is very interesting to me because of it kind of not doing anything, but on the terms of the company side of it, obviously it's been hit with the CV situation. That's probably why the stock hasn't done as much recently. The revenue's kind of declined, and the profit's not gone anywhere. But if you just go before the CV situation, you can see here, 2017, the increase in revenue to 2018. And even at the end of 2019, this company was putting in some really impressive growth, 483 million to lend 721 million at the end of March before the CV situation. Very, very, very good growth, you know. And the only thing is, like, if it was profitable or near profit, that would be the little thing that I would really love. But yeah, now that we're kind of coming out of the CV side of it, maybe you hope that they actually can post out some really good revenue growth again, which analysts are forecasting, and I would expect them to do that as well, with decent revenue growth, and obviously hopefully they can not lose as much money as well. They are looking to maybe come break even next year or maybe in 2 years time, which is still very feasible for me, you know. I always have a point where I don't invest in profitable companies, and that's normally when I need to see them have a vision of getting to profitability within 2 years of investing, and these guys should be able to do it according to analysts. Obviously I would have to run my own numbers on it, but yeah, you can see here, revenue, very good growth. It's not losing crazy amounts of money. So yeah, I think, like, when you look at what the company's going to do through revenue-wise and growth-wise, and could come to profit, it's quite interesting. The only little red flags that I do really have about this one is the balance sheet. I don't know if any of you guys are having this problem, but my Simple Wall Street is kind of doing this thing at the moment where the balance sheet numbers all mess up. Let me know if anyone else is having this problem with it. But yeah, the debt to equity is not, it's got a little bit worse, obviously, with it losing money. So that's the only little negative thing. And like, cash to debt isn't amazing. You know, the balance sheet could be a little bit stronger, but and also on the insider front, I'd love the founders to still have a lot of big shareholding, and I'd also like, if possible, yeah, a big holding with the insiders, if I can find that here for you, but there isn't any right here at the moment. So yeah, I mean, the CEO is all the way down here. Would be a little bit better if he was a bit higher up. But yeah, there was a lot of insiders actually buying recently, which was here around about the summertime, when, funny enough, the stock actually hasn't gone up much since then, which I guess is kind of positive. But yeah, that's definitely one that is kind of interesting to me. You know, let me know what you guys think about that one. But it's definitely one that's, if there wasn't other opportunities out there in the stock market right now, you know, this would be one that I would probably consider and go for a big deep dive on this one. So it's on my list. I might look into it a little bit further, but yeah, that's one that I am considering. Anyway, back to another one is this company, ChargePoint, CHPT. So this is the merger that's happened. It had a very good day on Friday. Obviously, like, some of the higher growth stocks did kind of put in them returns, but yeah, I mean, when this was down at $20 range, I was having a very high consider about buying this one, because I think, like, you know, obviously ChargePoint electric charge stations are going to be needed in the next kind of 10-15 years, 100%. You know, there's going to be more and more of these needed. You can see that you know, when you look at the actual company, the revenue they're putting in is absolutely fantastic. The only reason that I haven't actually gone across the line and buy these is the valuation is just a little high on these guys, still at $20. But I also have Tesla shares, so obviously Tesla covers this Tesla supercharging stations, so I kind of have an investment in here, but, you know, just solely to be a ChargePoint stations. I still think it would be a very good play, especially what we need in the next few years. So yeah, I had a really heavy think about this at $20, and I still didn't buy, but it's one that I am considering, especially when you consider, like, I think, like, SmileDirectClub's like 40% down off its all-time highs, and this one as well, this is down nearly 40%, all over 40%. You know, this was a lot higher stock not so long ago, so yeah, I've had a good think about this one. Still haven't pulled the trigger on it, but I'm definitely watching it heavy at the moment. Yeah. The next one is actually the only company on this list that I own, but I have not bought this company for either it might even be longer than that. I think I haven't bought this company for 3 years. So this is why I said it's on the ones I'm watching list, because I normally don't put companies I own on these lists, but I feel like because I haven't bought this company for 3 years, it's allowed to come on this list, which is JD.com. So JD.com is basically the Amazon of China. It actually is a company that sells its own products compared to Alibaba, which sells third-party seller products. This actually holds its products that it does sell. So yeah, Alibaba's like a bit more like eBay, really, even though that company tends to have the Amazon of China name. JD.com is actually the more realistic one, but they're expanding past the e-commerce side of it now. They're getting very big on other investments, especially the logistics side of it. that's growing absolutely huge. If any of you guys actually have ever looked into this company in detail, and the logistics side of it, it's crazy. Very, very far ahead of the game. But yeah, I mean, I'm not sure how correct the P ratio is, but this company is historically putting in like 30% revenue growth. It's now growing. Let's have a look at the chart actually. Let me get one up for you because you can see this one. I was only going to do it for Smile Direct actually, but I feel like I'll show you guys how good the actual growth on this company is, because it is very impressive. So if we just pop down here to the growth potential here, you can see the growth potential that has gone on, and you can see they are making profit now. When I actually first started buying this company, this was a prime example of a company that I bought which wasn't making profit but then got to profitability, and I could always see it. I was buying here when it wasn't making profit, and then I thought, it is going to get to profit at some point, and here we go. It has started to make a lot of more money now. Revenue's growing at a huge rate, and yeah, the company's on the list because once again, like the other ones, it is on a massive dip. When you look at the stock chart, I mean, I started buying my shares somewhere. I think I bought my shares in 2018, somewhere around here-ish. As you guys, if you watch my portfolio reviews, it's always been in there for a very long time, and I'm up like 200, 300% on that one now. But I was even up, when it was up here, I was only up 400%. But you can see it's just been on a really good run. But it is having a short-term pullback at the moment. It's nearly down 30%. And if I didn't own JD.com, this is one that I'd be very tempted to buy. But it's come down that much that I'm actually considering like buying some shares in it now. But yeah, that's one that I'm thinking about. Maybe if I could get like $60, that would be really good. Maybe that's when I do pull the trigger. But I'm watching it very close. But that's the only one that I do own on this list. But like I say, I haven't bought it for like nearly 3 years-ish now. So I think it can qualify to come on this list. Next up, I'm actually thinking of making a full video on this one. But Peloton, I've seen this starting to get mentioned a little bit. I'm watching this one because it is getting a lot of the headlines at the moment for a lot of the wrong reasons. I think they had an incident with the treadmill, I believe. I can't remember these exact in and out of it, but I think it was an actual child lost a life being around one of these treadmills. I like I said, I saw a video on it some time ago, like 2 weeks ago, and I think that was the incident or something. I think they were left unattended near the treadmill, and there was an incident with it. Like I said, I can't remember the actual in and outs of it, but I'm sure some of you guys probably will know what the actual story was a bit better than me. But yeah, I mean, this company actually got up to $165, around this sort of point, and obviously we're down like nearly 40% on this company, back down at the $100 side of it. But yeah, this company, once again, this is a typical IPO, did nothing, and you look at March was the game changer because this was one of the companies that massively benefited from the CV situation. The stock absolutely went on another tear. I actually considered buying this at this time, and I thought, I just can't see people spending $2,500 on like a bike and then paying £40 or something it was for like the classes every month. I just thought, I can see some people doing it, don't get me wrong, I can see some people doing it, but I just can't see it coming big mainstream. But it has done, and obviously the big thing that has helped it is gyms closures and people being working at home. That has definitely helped it a huge amount. It's massively benefited, and the sales have gone through the roof, and you can see here. And Peloton, fair play to them, they've done amazing. They've brought new models out at the right time as well to help them. And yeah, obviously it's pulling back now. Obviously it's a very rich valuation, and then you also have the combination of some bad news coming out, and then also you have the combination of it's at a rich valuation. It's had so much help it with the CV situation that is now going to come out of the company in the next 12 months, and it probably won't be able to hit the numbers that it has done in the last 12 months. That's probably what's going to happen with this one. So it's going to probably have a calming phase over the next kind of 6 to 12 months, where like the realistic valuation starts catching up with it. So it's not one that I'm intended on buying right now. It's one that I'm watching over the next 6 to 12 months, and if it does kind of flatline or even go down to even at this valuation, I can't buy this one. It will need to come down, double figures. We will be talking like $60-$70, unless it kind of flatlines here for a good period. Then a bit further down the line I might buy it. But yeah, it's one that I'm watching. But yeah, I'm still not sure on it because I'm still thinking how many people are willing to go out and buy this equipment because of the price. But you know, I say that, but yeah, they've always proved me wrong. So I am watching this one. I don't know if I'll still buy this one. It's probably the one on this list that I'm least confident of buying, but I'm definitely watching it because if it does go down enough, I always consider buying it. And the next one, the last one, which is one that we covered on the actual IPO, is Affirm and buy now, pay later. I think this will be very popular, especially with the online growth that we will have, and also because of the younger generation coming through, seem a lot happier to use these sort of systems to go buy things as well. So it's just a perfect thing. But you see here, I thought, what, this is going to have a very successful IPO. It will go up in value, and it did. But now we kind of had we've got the classic IPO now where it's kind of like actually chilling out a little bit. And you see here, it's had a massive drop. It's come down to like half its value. So yeah, I would like it to just calm down a little bit more. If you could stay around here, maybe. At the moment, the thing is, I don't like this company as much as what I like, say, a tattoo chair for Gang or Huya, and that's why I'm not buying it at the moment. But let's say next 12 months, Gang, Huya, tattoo chair all go up. Affirm still sitting at $74, back end of 2021, or maybe even lower. We know get a bit more of a lockup period. I don't even think the lockup period's come up yet. So yeah, it's January. So yeah, the lockup period would be about September, I believe. I'm just running those numbers off my head, but I think the lockup period where insiders could sell from the IPO would be September. So yeah, maybe the stock kind of just chugs along to September-ish. Just very much like what you saw with Peloton, SmileDirectClub. So yeah. I'll come back to this one at the back end of the year and I'll reassess it, but it's just on my watch list. I'm keeping track of it pretty much every kind of couple of weeks, just seeing what's going on with it. But it's one that I'm watching very close, and we'll see where this one goes. Yeah, like I say, I think it will still be very turbulent as we are in the IPO period, but one I'm keeping an eye on for sure. But those are the 5 stocks that I'm currently watching anyway. I hope you enjoyed it. Let me know if these are companies that you're watching, if there are any of these companies that you're buying, or any other stocks that aren't on this list that are down that you are watching very close. I've got a feeling that maybe CCIV it will be one that's mentioned quite a bit. I know some of you guys might be in that one, but yeah, hope you enjoyed it. If you could, smash the like button. If you're new, subscribe, and I'll see you on the next video.